Well, hi everyone, and welcome to the Buffett and Beyond Stock Analysis video podcast with your host, Dr. Joseph Belmonte, which is me, and Debbie with a Y. Hi, Debbie.
Oh, hello, that's me.
And these methodologies are based on the book Buffett and Beyond, second edition, published by Wiley Publishing. And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. Now remember, folks, the clean surplus return on equity is both a comparable and a predictability model and is totally different than the traditional accounting return on equity. So don't get them mixed up. And you can equate the clean surplus return on equity as the interest rate you get from a bank. So this is common sense now. A bank account with a higher return or interest rate will earn you more money than an account earning a lower interest rate. So it just follows that portfolios made up of stocks with high clean surplus ROEs or return on equity will outperform other portfolios made up of stocks with lower return on equity or interest rate. So think of your bank account when we talk about these stocks. The good.
Stocks that should be in our portfolio.
The bad.
Stocks that should be in somebody else's portfolio.
And the ugly.
Oh, stocks that should be in nobody's portfolio.
Okay, let's get on with some stocks. You'll see exactly how this method works and how we here at Buffett and Beyond set the investing parameters so that you, all of you, can outperform most of the professional money managers out there in investment land. And today, all our stocks are in the financial services industry. And the first stock we're going over is PayPal Holdings. Debbie, tell us all about this stock.
PayPal Holdings Incorporated operates a technology platform that enables digital and mobile payments by consumers and merchants throughout the world. It offers a wide range of payment solutions under the brands PayPal, PayPal Credit, Venmo, Xoom, Paydiant, and Braintree. And they have more than 197 million active users. Woo, a few.
That's a lot. Wow.
In 2017, approximately 7.6 billion transactions were completed on its platform. From 2002 to July of 15, PayPal was a wholly owned subsidiary of eBay, and the company employs more than 18,700 individuals.
And let's get right into the numbers. And the first thing we want to look at is that clean surplus return on equity. Now, you know that I want to see a stock that has an ROE of 20% or better to get into our growth portfolio. But the thing about PayPal is, number one, it's a new company. And number two, that clean surplus return on equity is increasing. That means the net income, all the way over here, is going up at an increasing rate. So it's not only going up steady, it's going up at an increasing rate. It's just like a race car that's going faster and faster and faster. And folks, the market loves that. And let's look at these two numbers over here. We have net income growth and revenue growth, and net income growth a whopping 36% projected for 2019, and revenue growth about 16.1% projected for 2019. And folks, the average stock in our database has revenue growth of about 6% and net income growth of about 7.2%. So you can see this stock is just knocking them dead, and it's getting more and more business as we go along. It has no debt. Can you believe that? This stock has no debt, and it pays out no dividends, which I like because that means it's putting all the money it's making back into the company in order to grow. And let's look how it's done in the past 1 year. It's this lighter rusty colored line, up a little over 15%, with the market up about 4%. So folks, it's doing almost 4 times more than the market over the 1 year period. And as we look over 5 years, the market recognizes the extreme growth in this stock. And again, it's this rusty colored line up 140%, while the market's up about 30% over the past 5 years. So Debbie, what's our next stock? And of course, we all recognize this one.
Oh yes, up next is MasterCard, of course, and it's a global leader in electronic payments. It serves as a processor, franchisor, and advisor to about 25,000 financial institutions in support of their credit, debit, and related payment programs.
I can't even name 5 financial institutions.
And it licenses its card brands, including MasterCard, MasterCard Electronic, Maestro, and Cirrus, to clients worldwide. Revenue is derived from both transaction volume and dollar volume, and they have about 13,400 employees.
Wow, it's a nice company, and let's look at the numbers and we'll see how nice it really is. And when we look at that clean surplus return on equity, folks, it has been over 20% for all the years that I have right here. The market just loved the company, and net income growth of 11.4% for next year, or for 2019, and revenue growth projected at almost 12% for 2019. Almost no debt, very, very low dividend, which of course we like in a growth stock. And folks, this net income growth and revenue growth are both way above average, but that clean surplus return on equity, folks, this is a very efficiently operated company. And looking at 1 year, well, this company's up about 35%, while the market's up about 4%. You can't beat that. And this 1 year is over the past 12 months. And then when we look at 5 years, we are looking up about 160%, with the market up about 50%. So, folks, this stock is operating on all 8 cylinders. And I think you know which stock we're going into next.
And that's Visa.
Yes, it is Visa.
And they are the world's largest retail electronic payments network, providing processing services and payment product platforms. This includes credit, debit, prepaid, and commercial payments, which are offered under the Visa, Visa Electron, Interlink, and Plus brands. Visa Plus is one of the largest global ATM networks, offering cash access in local currency in more than 200 countries. In Visa's global network, VisaNet delivers value-added processing, including fraud and risk management, and they have about 8,500 employees.
Well, let's look at the numbers on this stock. And folks, you can see that it is below 20%. I'm looking at the clean surplus return on equity. And remember, the clean surplus return on equity is different, much different than traditional accounting return on equity. So we want to see that 20%. However, we like Visa because this ROE is rising little by little, but it's still rising. And look at this net income growth and revenue growth projected for 2019. And folks, it's way above the average stock. Very, very low debt, very, very low dividend, and we are looking at another stock that is just knocking the socks off all the other stocks that are out there. We like Visa very, very much because this clean surplus return on equity, which is rising, means that the earnings and the net income are increasing at an increasing rate, just like we talked about PayPal before. And when we look at Visa and how it's done over the past 1 year, it's up about 28%, with the market up about 4%. And over 5 years, this Zoom, folks, is 175%, with the market up about 50%. And let's look at these 3 stocks together. And don't get cross-eyed on us, folks, because we are looking at PayPal over here. And I wanted to put in the net income growth and the revenue growth. And this is all projected for 2019. And I want to show you that even though this ROE, the clean surplus ROE, is not the 20% that we want, it is rising, and the projections for 2019 are phenomenal when it comes to net income and revenue growth. Now let's move on to MasterCard, and MasterCard with that very, very high ROE, but the net income growth and the revenue growth are lower, in fact, much lower than PayPal, but it has that high ROE. And then we look at Visa with an ROE under 20%, but rising slowly, not as fast as PayPal. The net income growth projected for 2019 is 18%, which is way ahead of MasterCard, and the revenue growth is about 1 percentage point ahead of MasterCard. So the purpose of Clean Surplus is to be able to look at that ROE and see which company should do better in the future. But we have a quandary here because they're all good. But when we look at PayPal with a rising ROE, MasterCard with the highest ROE, but between these stocks, it has the lowest net income growth and the revenue growth. And then Visa lagging in that ROE category. And when I say lagging, it's still above the average stock in the S&P 500 by a long shot. And the net income growth and revenue growth way ahead of the average stock by a long shot. So to see which one of these companies has done better and should do better, we would look at PayPal and MasterCard. PayPal because of that net income growth and revenue growth superior to MasterCard and Visa. However, MasterCard with that real high ROE, folks, you don't kick this down the street by any means, and Visa with the rising ROE and high net income growth. These are all three good stocks, folks. And remember that over any 10-year period, 96% of professional money managers cannot outperform the S&P 500 stocks, and we want to be able to outperform the S&P because that puts us in a category above almost everybody else. So we want to pick stocks that can outperform the S&P 500, which means ROEs, clean surplus ROEs, above the average stock of 14.5%. And looking at the past 3 years, because PayPal has not been around for 5 years, we see that PayPal is leading everybody by 140% over 3 years. MasterCard next at about 110%, and Visa trailing with 80%. But with the market up only 30%, these three stocks are outstanding, folks. And I kind of think I like all three of these stocks going forward.
Go, car, go.
Yes. And just to let you know that we have MasterCard and Visa already in our growth portfolio. And folks, I really think we're going to add PayPal for 2019. In fact, I'm writing it on my list as we speak.
Well, JB, I think we've just about covered all the questions sent in by our listeners out there in investment land. And remember, folks, we're here to answer your questions not only about individual stocks, but also about the stock market in general. So keep those questions coming, and who knows, we may even answer a question or two you didn't even know you had. And that's about it for today, JB.
Okay, folks, don't forget, if you want to receive a full free month of all our letters and complete access to our computer program, just go to our site, BuffettandBeyond.com, and sign up. Remember, all you need to manage your own portfolio, and it's free. Hey, just go to BuffettandBeyond.com, and remember, Buffett is spelled with 2 F's and 2 T's. That's BuffettandBeyond.com. Okay, folks, we had a great day today.
And tomorrow will be even better.
All right, bye, folks. We'll see you next time.
Bye, everyone.
And remember, folks, if you want to live on the beach like Jimmy Buffett, you've got to learn how to invest like Warren Buffett. We've had a good week, folks, and here's hoping that next week will be even better. You have a safe weekend, and we will see you next time.